Another week has passed by and a lot has happened in the world of corporates and startups. From banking stocks touching record highs to Jet unable to flap its wings and Byju's getting a low valuation, a lot has happened. Whatever has happened, we are going to discuss all of that and more on today's Companynama. I'm your host Ajay and let's begin with some corporate updates. First up, Tata consumers in race to buy Bisleri. Ramesh Chauhan, the man behind Thumbs Up and Gold Spot, is now selling his water-bottled drinking water brand Bisleri. Among the suitors are the Tatas. In a regulatory filing, Tata consumers said it was in contention with other players to buy the company. About 3 decades ago, Chauhan had sold the Thumbs Up and Gold Spot brands to Coca-Cola. Dropping hints about the buyer, Chauhan said he does not have a successor and his daughter Jayanti is not too keen on the business. Chauhan said it was painful to let go of Bisleri, but Tatas will nurture it and take care of it even better, said the Economic Times. Tatas already have water brands such as Himalayan and Copper. First Tata, then Adani, and now we move on to Reliance. India's largest telco, Jio, has got approval from the National Company Law Tribunal on Monday to acquire Reliance Infratel, which is under insolvency. The tribunal asked Jio to deposit 3,720 crore rupees in the State Bank of India escrow account to complete the acquisition of Reliance Communications Tower and fiber assets. On November 6, Jio had proposed to deposit 3,720 crore rupees in an escrow account to complete the acquisition of Reliance Infratel. Jio placed a bid of 3,720 crore rupees in November 2019 to buy Reliance Infratel. The Committee of Creditors has already approved the resolution plan with a 100% vote. And looks like Jet will still have to wait a little longer before it starts flapping its wings. A board member of Jalan Kalrock Consortium, tasked with reviving Jet Airways, said it disagrees with lenders on some aspects of settlement of dues and may go to the Supreme Court to settle the matter. He denied any move by the consortium to liquidate the airline. Earlier, reports said that the lenders of Jet Airways could sell 11 aircraft of the defunct carrier, effectively forcing it into liquidation. The National Company Law Tribunal (NCLT) had approved the resolution plan around a year and a half ago, but the consortium of new owners, Jalan Kalrock, has failed to pay the needed amount. Alright, this news will certainly impact your mobile and your pocket. Bharti Airtel on Monday increased the price of its minimum recharge for 28 days mobile phone service plan by about 57% to 155 rupees in Haryana and Odisha, according to the company's website and analysts. Analysts say this move could see customers giving up Airtel connections. The company has stopped its minimum recharge plan of 99 rupees, under which it offered 200 MB of data and calls at the rate of 2.5 paise per second. According to sources, the company has started trial of the new plan and is likely to roll out the same across India based on the result. It is likely to end all 28-day calling plans with SMS and data priced below 155 rupees. Right then, coming back to aviation, particularly airports, Fairfax says no to stake in Bengaluru Airport. Prem Vatsa, chairman of the $90 billion Fairfax Financial Holdings of Canada, said there would be no sale of its stake in the Bengaluru International Airport. Fairfax is the controlling shareholder of the airport, which will continue to expand until 2029, by when it will cater to 90 million passengers every year, said the Economic Times. Earlier, there were reports that Fairfax was selling its stake, and Vatsa has effectively denied these reports. Not only Bengaluru, even the Mumbai airport is in news. The Adani Group owned Mumbai International Airport Limited said it is likely to incur losses in the near future as its profitability has been hit due to the COVID-19 pandemic. The Mumbai airport suffered a loss of 177 crore rupees in 2021-22. Now then, SR made a big sale. The Ruia family-run SR Group on Monday said it has concluded the sale of captive ports and power assets located at Azira in Gujarat and Paradeep in Odisha to ArcelorMittal Nippon Steel India Limited for $2.05 billion or about 16,500 crore rupees. With the sale, SR has completed its monetization program and effectively became debt-free. The sale consisted of infra assets including a 270 megawatt power plant and 25 million tons per annum port at Hazira, Gujarat and a 12 million tons a year port at Paradip, Odisha. Well, that's all the corporate updates, and now we move on to those companies that are in a legal mess in our next segment on the radar. First up, the Central Bureau of Investigation has filed a charge sheet against former chairman and managing director of ABG Shipyard Rishi Agarwal, 5 others and 19 companies in connection with an alleged bank fraud of 22,842 crore rupees. The CBI has so far detected diversion of bank money worth 5,000 crore rupees by Agarwal and other co-accused to invest in immovable and movable properties in India and abroad. ICICI Bank is believed to have the highest exposure of 7,089 crore rupees, followed by IDBI Bank at 3,639 crore rupees, State Bank of India at 2,925 crore rupees, Bank of Baroda at 1,614 crore rupees and Punjab National Bank at 1,244 crore rupees. Up next, we move on to some insolvency proceedings. The NCLT, the bankruptcy court which has allowed Edelweiss Asset Reconstruction Company's petition seeking to initiate insolvency proceedings against S. Kumars and has appointed Anjan Bhattacharya as its interim resolution professional. The ARC had approached the Mumbai bench of the National Company Law Tribunal (NCLT) against the over 7-decade-old textile maker and leader in the school uniform fabric segment after it defaulted on dues of more than 414 crore rupees. Well, the NCLT initiated insolvency proceedings. On the other hand, NCLAT has admitted OYO's plea. The National Company Law Appellate Tribunal admitted OYO's petition challenging the Competition Commission of India's order that imposed a fine of 169 crore rupees against the company. For the orders to sustain, OYO has to deposit 10% of the total penalty within 6 weeks. In October, CCI had levied a penalty of 223.5 crore rupees on Make My Trip India IBBO for abuse of its dominant position in the online travel booking space and entering into an anti-competitive tie-up with OYO, a low-cost hotel chain group. Well, those were the companies that were in a legal quagmire. Now, it's time to look at the world of startups. First up, Process, the Dutch-listed investor in Byju's, has valued its 9.7% stake in the company at $578 million. This would mean a valuation of $6 billion for Byju's, which is way below the $22 billion in its last round of funding in October. In 2018, Process had invested $536 million for just over 11% stake. The company said it stopped equity accounting for Byju's in September after it lost its significant influence over Byju's. Up next, Ola Electric has ramped up production capacity to 4 million. This will also include motorcycles, by the way. It will also build a plant with a 5 gigawatt of battery storage capacity in the same factory on the outskirts of Bengaluru. Ola Electric is also planning to set up the initial phase of its passenger car manufacturing capacity from 2024. Moving on, IndiaMart-backed B2B procurement marketplace Procmart. Moving on, IndiaMart-backed B2B procurement marketplace Procmart has raised $10 million in Series A funding round led by Sixth Sense Ventures. The latest round of funding will be deployed towards international expansion, strengthening vendor partnerships and upgrading technological and warehousing capabilities. The current round comes shortly after IndiaMart's subsidiary TradeZeal Online agreed to sell 4,850 equity shares worth 13.62 crore rupees of Procmart parent Instant Procurement to Sixth Sense Ventures. Well, we started today's Companynama with a Tata and we close it down with another Tata as Ratan Tata backed Mailit, a technology-driven mailroom management and logistics company, is looking to raise $10 million in a Series A funding round. The company said Mailit, operated by Mailit Mailroom Management Solutions Private Limited, has also raised an undisclosed sum in debt funding as a bridge round before raising its Series A. The funding was completed through PSI, a global network for venture and private equity investors. Well, with that, it's time to wrap up today's episode of Companynama. Stay tuned to Money9 English's YouTube channel and do download the Money9 app to watch the latest episode of 2 plus 2 equal to 5 as to how corporates have performed in the second quarter. This is me, Ajay, signing off. Take care, happy weekend, and good night.